Welcome back to Morning Markets on Monday, the 22nd of November. Last week was an interesting one from the perspective of data prints and economic events. We had strong retail data showing the strength of consumer demand despite headlines of rising prices in the UK and in the US. We learned more about the current inflationary picture here in the UK and had strong industrial prints from the US. In terms of market moves, they were relatively calm. We can see the key moves which are up on screen now. Just pulling out a few examples there, you've got the FTSE 100, which was lower, given the sterling strength which we experienced. And Europe more challenged by the shift in sentiment as activity restrictions tightened, given rising cases of COVID infection rates and the persistency of supply challenges in the energy market, causing some political disruption there. In the main, global equities were down, only marginally supported by the US and the strong data reports. In the bond market, government bonds better performing relative to corporates as yields moderated. So what are the key things which we'll be looking out for this week and discussing as a team and here on Morning Markets? The minutes from the Federal Reserve Open Market Committee in the US, the US Federal Reserve, are due on Wednesday. In the last meeting, the Fed members agreed to start tapering back the rate in which they purchase bonds and mortgage-backed securities, which are both part of the quantitative easing support program, which kicked in last year. Given the pickup in inflation and the improving employment picture, they decided to start moderating the pace back a little bit, but left rates unchanged. So analysts will really be keeping a close eye on the expression and the emphasis used in the discussion around economic growth and also inflation. They'll also be looking to the dot plot, which is really a graphical representation of where each Fed member believes rates should be at a given point in time. The trend in recent meetings has been for that expectation to come in, so rates expected to rise sooner than previously expected. So at this point in time, it's looking around mid-2022, given the strong growth and inflationary trajectory which we're seeing. We'll also receive estimate purchasing managers index reports from Provider Market. The indicators in recent months have shown resilience in the service and the manufacturing sectors, globally supported by consumer demand and improving supply lines in many cases. It'll be a shorter week for the US market overall, given the upcoming Thanksgiving holiday. A similar setup in Europe this week. On Thursday, we'll receive the monetary policy meeting accounts from the European Central Bank, the ECB. The reason these minutes will be interesting to analysts is the ECB are currently one of the more dovish central banks when compared to peers in the developed world, such as the US and the UK. By dovish, what we really mean is they are expecting to start tapering policy, so winding back policy slightly later than the UK and the US. Analysts will be focusing on the dynamics of growth and inflation and the views of the voting members ahead of their next meeting in December. This comes at an interesting time when cases of COVID-19 are picking up in Europe, notably Germany and Austria, who last week restored activity restrictions, the combination leading to a weakness in the euro relative to both the pound and the dollars, just to pick out a few. To put this in context, the euro was down 1.6% relative to sterling, so it was 1.6% weaker relative to the pound over the week and 1.4% weaker relative to the US dollar. We'll also receive PMI data for Europe and on Tuesday here in the UK, which will be interesting as the data last month showed a real improvement in momentum. This will be important as we have the upcoming UK Bank of England Monetary Policy Committee, which is expected to start to show signs of a movement in terms of policy after they held last month. Thank you very much for watching, and if you'd like to join us for tomorrow's Morning Markets, please subscribe to the True Potential YouTube channel.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.